watching News9 live, and this is Business Plus. I'm Krishnakumar, and I'm being joined in the studios by my friend and colleague Suyash Maheshwari. Suyash, thank you so much as always for taking time out. And we begin the evening edition of Business Plus as always with how stock markets closed for this trading session, the Wednesday trading session. Suyash, talk to us. It was a flattish opening for the markets this morning. Not much cues moving the markets really. How did it close?
So it was a very interesting session today, Krishna. After a flattish opening, as you mentioned, Indian markets continue to tread lower throughout the session, and sensex and Nifty fell about 0.5%, with Nifty even breaking its near-term support of 19,500. However, in the last half an hour or so of trading, we saw a sudden reversal of trends as bulls came back to action, pushing the Nifty index above the 19,600 levels, a level at which it was able to close also above the 19,600 levels. Now, the broader markets today, Krishna, remained on a rather flattish note. Nifty Midcap 100 was up about 0.08%, as you can see. Still, it continued a new lifetime. It achieved a new lifetime high of about 40,300 levels. The small cap index also formed a new lifetime high of about 12,712 levels, but it settled on a flattish note at about 0.15% higher.
Right, that's how the broader markets ended for the day. On your screens, 0.18%, 0.15%. We have Mr. Avinash Gorakshakar, Director Research, Profitmart Securities, now joining us live on the broadcast to decode first how the broader markets performed for the day. Avinash, lovely having you on the show as always. Talk to us, flattish opening, flattish closing, not much movement in the markets of late.
Yeah, I think, Krishna, I think the markets, as you rightly pointed out, the first half was a very dry session. In the second half, the Nifty managed to, close with marginal gains. But I think what was interesting is today the bank Nifty closed in negative, and I think you could see a little bit of selling on most of the banking counters. But I think the broader market, especially the small cap and the mid cap, stocks continue to show a very strong kind of momentum. Our sense is that on the broader index, the markets may not go up or go down that quite significantly. It's going to be a very close range for the broader kind of indices. But as far as the broader companies are concerned in the small cap and the mid cap basket, you could see continued momentum because there's going to be clearly a valuation catch up. And I think wherever companies have posted good numbers, have posted good commentaries, I think there's going to be a lot of stock specific activity. So I think it's going to be a stock specific approach, at least for the next couple of weeks. The index may not show a significant upside, at least in the very near term.
Fair enough. Talking about the next couple of weeks, what will happen in the next couple of weeks is the US FOMC meeting. All eyes on whether the Fed will be hiking interest rates or holding interest rates. Nobody is expecting a cut. Tell us, from that perspective, how do you see the build up to that big decision in the Indian markets?
I think, Krishna, as far as the US interest rates are concerned, I think markets are already penciling a 25 basis point hike. And I think this is partly factored in. I think what the commentary from the governor is going to be there on inflation is going to be very important because, see, headline inflation still continues to be quite elevated. And I think the comfort level of Fed is, around 2%. So for that to happen, it might take another, say, couple of quarters. So it's going to be still a long way before we could see any meaningful rate cuts from the Fed. And I think this is definitely a factor which will start getting discounted as the Fed meeting comes closer. But my sense is that, anything more than 25 basis point cut would actually rattle the market. A 25 basis point hike is something which is already factored in. So I think more than the rate hike, I think it's going to be the commentary, which is going to be very important.
Hi Avinash, Suyash. So now the Nifty, the markets have been in an uptrend for the last 4 sessions, and even in the last 2 sessions, Nifty has managed to defend the crucial 19,500 levels. What's more intriguing is the fact that the volatility has subsided over the past couple of sessions. Even today, the fear index, India VIX, was down by about 1.27%. So does that make a strong case for at least a bullish sentiment to prevail in the short term?
Yeah, I think as I rightly mentioned to you that on the broader index now, I think it seems a little bit difficult for the the Nifty or the Sensex to show any significant upside, at least in the very near term. I think the earnings season is over. Markets are going to focus on macro factors like a weaker rupee, higher crude prices plus inflation. I think even the August data which has come in as far as the monsoon progress is concerned is also a little disturbing, considering that the monsoon had a very dry spell in the month of August. So I think more importantly, as more and more data points come in on the macro side, the markets would definitely gather more momentum. But typically, I think the index now seems to be in a range where possibly a upside of say 50, 100 points on the upside and on the downside around 100, 200 points. So I think it's not going to be a very large movement. The index may stagnate for some more time, and it's going to be more of a stock specific approach which is going to be adopted by most of the market participants.
So Avinash, since you're not expecting much of an upside from the headliners, is it safe to say that the divergence in the performance of mid cap and the small caps and the large caps will continue?
Yeah, it will continue, considering the fact that ever since the rally in the market happened since April, I think mid caps have grown quite significantly. In fact, we have seen a lot of interest in the IPO market also, especially for small and mid-sized companies. So there's a lot of liquidity which is coming in, not only from HNIs, from PMSs, but even from the institutional activity. So I think you're going to see a lot of action in the broader market, Suyash, and that I think is going to continue. I think wherever we see earnings growth to be much better than what the street expects, and where earnings growth is going to be sustained, I think you're going to see these stocks getting accumulated over a period of time. I think it's going to be more of data points which I think markets will again monitor when the Q2 numbers are out. But I think it's going to be clearly the good companies getting accumulated, and the weaker ones being weeded out.
Right. Avinash Gorakshakar there, giving us the broader picture for the markets. And repeatedly, Avinash has been talking about the fact that it's going to be stock-specific action. Stock-specific action is what the markets are going to be all about for the next couple of weeks at least. And let's talk about that then. Suyash, today there was some stock-specific action. We thought we'd talk about that first, but then there's a very clear top gainer in today's trade. Over 4% up, Tata Consumer Products. Now that on a day, we will get to you, Suyash, and you can help us explain all the top gainers. But because for now, we're going to focus on that top gainer for the day, Tata Consumer Products. And that's because, Suyash, some big news brewing on Tata Consumer Products front. There is now news that Tata Consumer Products is looking to buy the iconic Indian snack brand Haldiram's. And get this, Haldiram's is looking at a valuation, or wants a valuation of $10 billion. That's right. It's not million, it's billion. $10 billion is the valuation that Haldiram's is looking for. Tata Consumer Products, Tata Group wants to buy Haldiram's, but it feels that that $10 billion valuation is a little too high, to say the least. So it's right there in that negotiation table. Big news. And was that probably one of the triggers even moving Tata Consumer Products stock today? I'll just check with Avinash and then you can talk to us about the gainers. Avinash, talk to us. Big news coming in. Tata Group, Tata Consumer Products set to buy Haldiram's for $10 billion if Haldiram's have their way. And now today, Tata Consumer Products was up over 4%.
So I think, Krishna, you're right. I think markets were speculating on this rumor that Tata consolidated would buy out Haldiram's, and the valuation which we are also hearing is about $10 billion. Now, typically, I think if you look at the way Tatas have acquired brands in the past, they've always paid a significant premium for products which are really sustainable and which have got a mass market. So I think it remains to be seen whether this 10 billion valuation will be approved or not. But anything nearby that also, if the Tatas manage to buy out Haldiram's, I think it would be a very significant kind of booster shot for Tatas, considering that the snack market in India is growing in strong double digits. The Haldiram group enjoys a very strong brand presence. So I think all said and done, markets should start factoring in what could be the kind of incremental top line profitability estimates. Valuation apart, I think the markets would obviously look at the kind of earnings impact and obviously how this deal is going to be funded. So I think it's going to be interesting. If at all it happens, it's going to be a very big multiple re-rating trigger for Tata Consumer.
Right, tell us, how do you see, what is your outlook for the stock from here on? Because it's not like the deal is going to be done tomorrow. Are you seeing, more buying interest in the coming days until the day the deal is done?
No, I think my guess is the markets will keenly await for some kind of commentary, from the management as to what is the status of the deal. I think even if the deal is going to be executed over the next 3 to 6 months, I think some formal announcement from the company is something which the markets would like to get a clear sense whether the deal is almost through or not. But I think, yes, on a broader basis, I think Tata Consumer will stand to benefit, because as more and more urbanization happens, consumerism is taking off. Tata Consumer is a company which has got very strong brands, and I believe, now post COVID, demand for snacks and demand for, packaged foods is growing significantly. So I think you will have to wait and watch, but I think the growing market itself shows that this kind of product mix which the company has is going to, sustain their earnings over the next, say, 1 to 2 years.
All right.
As Avinash said, Krishna, it will be a big trigger for the stock, but at the same time, as we were walking into the studio, there were also reports that Haldiram, as of now, has denied reports that it is looking to sell the stake to Tata Consumer Products. There are also reports that it's in talks with Bain, another contender to buy Haldiram. Now, Bain is looking to get 10% stake as opposed to Tata Consumer, which is looking to acquire a majority 51% stake in the company.
Right.
So far, Haldiram has denied reports.
Fair enough. Haldiram has denied reports. Tata Group is looking to buy 51% of Haldiram's. Haldiram's is, for that deal, wants an overall valuation of $10 billion. But as Suyash rightly pointed out, nothing is confirmed on the table. We just know that Tata Consumer Products stock was the biggest gainer in today's trading session, up over 4%. Take us through the rest of the gainers, Suyash, literally.
Certainly, Krishna. So if we can have the gainers chart on the screen, Tata Consumers, as you mentioned, was up 4%. Divi's Lab was among the top gainers today. Now we saw a rally in the pharma stocks, and pharma stocks have been rallying in the past 2-3 weeks or so. Bharti Airtel was also among the gainers. The stock has been consolidating at about 860 levels. The stock ended about 1.6% higher in today's session. Now HDFC Bank, which has been also in a consolidation phase ever since the merger with HDFC, and has been trading about 1580 levels, was in the gainers today. It was among the top gainers in the blue chip stocks. It was up about 1.5%. Another stock was Britannia. It was up about 1.4%. Now, if we are talking about losers, steel stocks saw some sort of a correction after the metals pack has been in some sort of a bull run in the last week or so, where the Nifty metal pack has rallied about 7%. Although there was some correction in the pack today, and as a result, Tata Steel was down about 1.71% in today's trade. Another loser was Hindalco, another stock in the Nifty metals pack. It was down about 1.65%. Nifty Bank and the banking stocks continue to be under pressure, and as we can see, Axis Bank was among one of the losers in today's session, as was IndusInd Bank. Both stocks declined over 1%. Another stock that was in focus today was NTPC, which was down about 1.3%.
Right, the big gainers and losers for the trading session. Avinash, talk to us. Your thoughts on these the stock-specific action for Wednesday's trading session.
No, I think clearly, I think one of the losers today was the banking sector. I think banks continue to remain under pressure, and I think that is not a good sign. Whenever the bank Nifty gets weak, I believe the forthcoming session on the broader index gets a little bit murky and more volatile. So I think if the bank Nifty is not able to significantly outperform, then I think you could see some further selling pressure on the overall index levels. I think within that, I think the PSU stocks like State Bank of India, Bank of Baroda, Canara Bank, I think were key losers. In fact, in the private sector banks also, ICICI, Axis Bank were under pressure. So I think in the near term, we would suggest that investors should be a little wary about entering these stocks. There could be some more selling pressure here. And as far as the metal stocks are concerned, Krishna, I think metals were going up purely on expectation that China would enter the metal market in a big way. That has not yet happened. And I think that is the reason you're seeing all-around selling in stocks like Tata Steel, Vedanta, Hindalco. And I think this pressure will continue for some more time, because the domestic market is obviously showing good signs of recovery for the steel and the metal market. But the overseas market still has seen very softer metal prices. And that is definitely not a good sign for these companies. We could see another lag, or maybe a kind of a static kind of a quarter for most of these metal companies. So I think metals and banking, I think one should keep away. And I think on the positive side, as I mentioned, we are positive on auto components, real estate. We feel that there could be good opportunities here over the next, say, 6 to 12 months.
Right, that's Avinash's thoughts on the big gainers and losers for the day. Suyash, on that note, I think it's a good time to check in on the sectors, that stood out in trade today. As far as Tuesday's trading session was concerned, it was all about the metals, FMCG, and IT. Talk to us. What were the big gaining and losing sectors for the day?
So let's talk about the gainers first. FMCG continues to gain traction. The sector gained about 1% in today's trade. The pharma sector is another one which we were talking about earlier. It has been on some sort of a bull run and has emerged as a contrarian bet rather, and the index was up about 0.9% in today's trade. The banking stocks continue to be under pressure, as Avinash rightly mentioned. The Nifty banking index was down about 0.3%, and PSU bank index was down about 1%, whereas private bank were down about 0.5%.
Right. So, Suyash, FMCG on a good upswing thanks to the festive season that's on the anvil, I'm guessing?
The FMCG pack had been under pressure, Krishna, and what we are seeing is kind of a catch-up rally in that segment. Also, the demand outlook has improved. The economic activity is definitely picking up. So maybe also definitely the festive season will bode well for the FMCG sector also. So the expectation is that the demand will eventually pick up, and as we know, the market is forward moving, and it's pricing in that expectation that the demand will eventually pick up.
Right. Thank you, Suyash, for that. Let me quickly get a check-in from Avinash, and then we'll get to some of our deeper analysis of the day's trade. Avinash, quickly, any sector that stood out in trade for you today? FMCG doing well yesterday, FMCG doing well today, pharma continuing its good run. Anything that stood out for you, really?
No, I think pharma and FMCG are two sectors which have stood out of late. I think markets have turned volatile. So I think, these are clearly defensive sectors, and we have seen that a lot of interest has started coming in at lower levels in FMCG as well as pharma companies. In FMCG, we believe the larger players like Godrej Consumer Products, Britannia, typically a Dabur. I think these are stocks which have been, quite heavily underperformed in the last few, weeks. So I think some amount of catch up is happening, and markets are expecting that. Obviously, September, hopefully being a good month for the monsoons, you could see the demand from the rural India pockets, improving from the second half, and that is going to be good news for most of these FMCG companies. I think another sector which we feel has got a kind of a good potential to bounce back is the domestic two-wheeler sector. I think we have already seen larger players like Bajaj Auto, Hero MotoCorp, putting out positive volume growth numbers in the month of August. Hopefully the monsoon is good. You could see strong two-wheeler numbers. So I think this could be also be a sector which could possibly bounce back in the very near term over the next 3 to 6 months.
Right. Avinash, stay with us because Suyash has just depicted a couple of trends in the market, in certain sectors because of both global and local news triggers. One set of stocks are the gas sector stocks. Talk to us, Suyash. What are you picking up?
So, Krishna, in today's session, the gas stocks rallied as much as 6%. Now, this was despite the fact that the oil prices have now scaled their 10-month peak and are trading currently above the $90 per barrel. The Brent crude is currently trading.
Right.
And even at today's session, as you can see on the Petronet LNG almost rallied about 7% in today's trade. Indraprasth Gas was another one which rallied about 1.5%. Gujarat Gas, GAIL, Adani Total Gas also ended today's session with moderate gains.
Right.
Now, before we talk about why the gas stocks are rallying, it's also necessary to establish a relationship between energy prices and the stock prices. Now, for companies that are in the business of exploration and production, typically rising crude prices bode well for them, as it means that they can sell their products at a higher prices, so the profitability will take a boost. The anomaly here is India is a importing country, net importer country, and what happens is when the raw material prices rise, the cost of goods sold component rises as well, which could squeeze out the profit margins unless these companies are able to pass on that increase in price onto the consumers. So a bit of anomaly that the gas stocks were in a rally today. Avinash, what's your take?
Avinash, you're talking about the... Go ahead, sir.
I think Krishna, I think Suyash rightly pointed out that whenever globally crude prices start rising, I think market participants always look at alternatives like natural gas companies, and I typically would say that when crude prices go up, obviously it hurts the oil marketing companies, it impacts the gross refining margins, but gas companies eventually have a better kind of a pipeline visibility, because clearly in terms of pricing, if you look at CNG or PNG, I mean, these are energy kind of inputs which obviously play well when crude prices go up. The other segment which I think also has done well is the sugar companies, because ethanol prices again are going to go up, and I think that is also going to be another trigger which has arisen because of rising crude prices. So I think markets obviously look at these kind of logical counterparts. Whenever crude prices go up, obviously alternatives do better, and I think that is the reason today gas prices were up. I think hopefully some more increase in gas prices looks to be very much possible, because for a long time these companies were not going in for any price increase because crude prices were ruling pretty soft. So I think these could be one of the reasons why the markets were quite positive on the gas stocks today.
Right. I just have to ask you one more thing. In that stock list of stocks that Suyash mentioned is GAIL, and there's been some news on GAIL regarding a raid, a CBI arrest. 4 top officials, including the executive director, has been arrested. And raids have taken place across Noida, Delhi, and Visakhapatnam offices of GAIL. And there you are. The stock was up, in morning trade as well, and closed down again nearly 1% in the green. When I asked another analyst how come, and then that analyst said that this is a 50 lakh rupee bribe case. Probably the markets don't make much of the fact that this is just a 50 lakh rupee bribe case. Is that true?
No, I think Krishna, your point is right that the bribe amount is very small, and secondly, it's business as usual at GAIL. So my sense is that markets are looking at the overall earnings kind of trajectory and picture for the company as a whole. Although sentimentally, this is not a good, kind of development. Any senior management actually who has a kind of a, such kind of who gets involved in such activities is definitely not liked by the markets. I think broader, markets obviously look at the earnings picture, and I think when gas prices go up, obviously, GAIL, which is one of the largest pipeline, players in the country, is obviously bound to benefit. It's a fairly strong annuity kind of business, and I think numbers for the last quarter were also quite encouraging. So I think this bribery case will not have any meaningful material impact on the earnings of the company, and that is why the markets are quite positive on the stock.
Right. Anomaly of anomalies at GAIL. And a day in which gas stocks prove to be an anomaly, you have a GAIL as well having its own anomaly. We'll move away from gas and oil and to something sweet, which is the sugar sector. Sugar stocks, Suyash, talk to us what's happening in the sugar sector.
Yes, as Avinash rightly pointed out, sugar stocks had been trending today, and actually they rallied as much as 10% in today's session, with many marquee players posting strong returns. Now this is on the back of the world's largest sugar trader Avinash saying that it expects a shortage in the supply of sugar. Now Avinash is saying that global markets will face a 5.4 million metric deficit of sugar in the coming season. Now this will be the 6th straight year where we'll see a shortage in sugar supply. Now what will happen is, when there is a supply squeeze, the prices rise, and this bodes well for the sugar stocks, and as a result many of the sugar stocks were trading in the positive today. As you can see, Dalmia Sugar was up about 5.65% in today's trade. EID parried, rallied about 8%. Uttam Sugar Mills also posted a 5% gain in today's session. Balrampur Chini, Bajaj Hindustan rallied about 2 to 3%.
Right. Sugar stocks sweetening further. Avinash, talk to us. A global sugar supply shortage is what is expected at a time when everybody is talking about cutting out sugar from their consumption habits completely. I thought that would impact the sector, but clearly there are bigger issues at play over here.
I think, as Suyash rightly pointed out, I think sugar prices have been started rising globally, and I think that is definitely going to be positive news for most of the larger, sugar companies here. But I think additionally, to counter this point, one should understand that whenever crude prices go up, the government has been focusing on increasing the blending ratio of ethanol in petrol, and I think this is going to be around 20% by FY25. We have been also hearing reports that possibly the government could hike up the ethanol prices by about 4 to 5 rupees per liter. So I think both sugar and ethanol would now make more money, and obviously ethanol being a byproduct obviously makes a bigger contribution in terms of the overall gross contribution. Our sense is that if sugar prices go up, I think that would be a big positive for the companies, provided the government doesn't come in and impose some controls. In India, I think despite the fact that the sector is deregulated, Indian companies don't have the liberty to increase sugar prices that frequently. So I think it's going to be a balanced kind of a picture going forward. But overall, I think today's move is clearly a reflection that higher sugar prices would mean that both sugar and ethanol would make a decent amount of money. And I think one should look at the larger players here, Krishna. Typically, something like a Balrampur Chini or a Dhampur Sugar, Dhampur Bioorganics, or typically typically larger players like Renuka Sugar, which has a large sugar as well as ethanol capacity.
Right.
Now, let's move back to the FMCG sector again. Now, the expectation, as you said, sugar prices may not rise as much, but the crude prices are rising. Now, will the FMCG products become more expensive, or do you expect that they would not go through price hikes and maybe their profitability will take a hit?
Also, this dilemma of prices is coming at a time when the festive season is on the threshold of festive season, not the best of time to hike prices, is it?
No, I think increasing prices would be the last thing on the minds of most of the FMCG companies, because as everyone is aware, most of the FMCG companies bet on the volume growth kind of metrics. And I think volume growth is definitely expected to be much stronger if, obviously monsoons are good, rural demand would pick up. And I think pricing wise, I think if the crude prices do go up, Suyash, then I think you could definitely find EBITDA margins coming under pressure. I think the FMCG companies have no choice. The festive season, they would not make kind of a mistake of increasing prices significantly, because price is very sensitive. I mean, demand is very sensitive to prices. And to that extent, it's going to be only the volume growth trigger which is going to play positively for these companies. So I think September to December is going to be a period where possibly volume growth could come in double digits. And that is something which would possibly take care of the price increase in the crude or maybe other input cost to a little extent.
Right, Avinash, quickly, talking about triggers, railway-related stocks have seen a recent trigger, and that is the fact that there is capex going on at India's railways. And if you take a look at all those stocks, Suyash talked about IRFC, IRCTC, RVNL, Railtel, Aircon International. There has been movement. Only IRCTC is up nearly 1%, but everything else in the red for Wednesday's trading session.
So, Krishna, most of these stocks were actually in a bull run, and if you are talking about individual stocks, IRFC in the last 3 sessions before today's decline rallied as much as 40%. So, some profit booking was in the offing, and I think that's the result why several of these stocks snapped their 7-day winning streak and ended today's session with moderate losses. Now, IRFC fell as much as 5% in today's trade. It closed about its near its day's lows at down 4.8%. IRCTC was an outlier in that it rallied about 1%. Other stocks such as RVNL, Railtel, Aircon International also succumbed to profit booking. Now, the trigger for these stocks, of course, as you mentioned, that the capex is expected to pick up. Also, the Railway Ministry is seeking cabinet approval for 5.2 lakh crore investment during fiscal 24 to 31 to improve the overall, connectivity of railway. So, this could bode well for these companies, as it means that their order book would go up.
Right. Suyash, they're putting things into perspective. Good trigger for the rail stocks in the recent past.
Maybe a good time to enter, since we are seeing some sort of a profit booking taking place.
Also, the Railways Board recently had its first woman CEO being appointed as well. Avinash, if I can quickly get your thoughts on the rail stocks, lots of news triggers, from the fact that there's going to be capital expansion at India's railways to the fact that India's Railways Board has got its first ever woman CEO. Lots of news triggers, and unfortunately for the day, it is profit booking time. But then again, would you say good space to invest in for the medium to long term?
Yeah, I think the railway infra theme, Krishna, is going to gather more and more momentum in the longer term. I think in the short term, as Suyash rightly pointed out, these stocks have jumped quite significantly in a very short period of time. Specifically, if you look at IRFC, in the last 3 to 4 days, the stock is up by almost 40-odd%. Now, this company largely caters to only railways for their capex requirements, caters to about 30% of their requirements. So I think some profit booking is definitely advisable, and I think this is rightly come about. But I think other stocks like Railway Vikas Nigam, typically Railtel, or for that reason RITES, I think these companies are sitting on order books, at least for the next 18 to 24 months. And most of these companies have got very strong balance sheets, very little debt on the books. And I think they have definitely ensured that a lot of cost optimization has also happened. So I think over a longer period of time, specifically, for the wagon companies, which has not been put in this slide, I would believe, companies like Jupiter Wagons or for that reason Titagar, these companies could also be a very strong, compelling bet provided one takes a 2-year view. Definitely, these are companies where a lot of revenue visibility has already been built in, and I think you could see good amount of upside provided you have at least 18 to 24 months time frame, as far as your investment is concerned.
So now talking about railways, you said that infrastructure themes largely remains intact, and it could be one of the sectors or other themes that maybe investors could look at because of course the government's capital expenditure, which has already picked up earlier in the year and it's expected to increase moving forward. So is it a particular theme that you are tracking, and if it is, what are some of the stocks that maybe one can look at right now?
I think one could look at electrification, basically the gauge line settings, and mostly the wagon manufacturing. I would believe that within the wagon manufacturers, Titagar and Jupiter Wagons, Suyash look to be quite attractive if you look at the earnings from a 12 to 18-month kind of time frame. Although these stocks have gathered a significant momentum, I think Titagar is sitting on an order book of almost 27,000 crores. Our sense is at least next year's 3 years business visibility is assured. As far as Jupiter Wagons is also concerned, they are also sitting on a 2-year order book with almost 6,000 order book, as of date, the wagons. Most importantly, from the PSU side, I think companies like Railtel and RVNL, we believe that there's a lot of legroom for growth, considering the fact that Wi-Fi mobility, which Railtel is targeting across almost 600 odd stations in India, is a very big opportunity. And RITES has definitely ensured that its consultancy business is picking up quite well. It started doing a lot of contracting jobs. So I think it's going to be a pick and choose across the railway stocks. But I believe that these 3-4 stocks, if one were to put your money and keep a 12 to 18-month horizon, I think one could definitely get a decent risk reward.
Fair enough. Avinash Gorakshakar there, Director of Research of Profitmart Securities, joining us with all the wisdom on the day's trading session, how to get ourselves ready for the way forward. Thank you, Avinash, as always, for taking time out to break down the market session in detail for us and answering every single query that we possibly have in our minds. So I hope to have you back again soon on the show.